Welcome to 10 out of 10. This is the podcast that aspires to give you 10 takeaways in just 10 minutes as we discuss key issues surrounding the home furnishings industry. I'm Mark Schumacher. And as always, though, of course, we got to start out and thank our sponsors. I want to thank Synchrony, Fortiva Retail Credit, American First Finance, and Versatile. Now, together, they create a unified platform that, using Versatile's technology, connects Synchrony for those prime promotional offers, Fortiva for second look financing, and payment options for American First. This is all about, as you know, getting that quick yes in store or online. So thanks to all of them. My guest today, I'm excited about our conversation. Michael Lasser joins us. He's a senior research analyst for UBS, of course, an investment bank, and he specializes in focusing on hardlines, broadlines, and food retail sector he's been doing this now. I think you've been with him about 14 years.
That's
if
right.
I'm not mistaken. But Michael, first of all, thank you so much for joining us. I'm going to start the clock here for our 10 minutes, and I want to really give folks a lot to talk about because gosh knows there is. Let's start with the easiest stuff first. So there's been a lot more saber rattling when it comes to tariffs, and particularly on furniture. Can you talk a little bit about what you're seeing there and the pressures that perhaps that's creating?
So, well, first, thank you so much for having me, Mark. I'm always thrilled to spend some time with you and your audience. As far as the tariffs, it's a very fluid situation. The home furnishing specific tariffs have gone into effect in the last week or so with some new tariffs on upholstered products, amongst other categories within the industry. This, in our view, will most likely be a factor that the industry is going to have to navigate through in 2026. A lot of what's going to be sold in the short run is already on shore, so not subject to some of the newer tariffs. The key question mark, though, is how is the consumer going to absorb all of the pricing that's going to be thrown at it as we get through the rest of this year and into next year? It's going to increasingly be important to make trade-offs. In the past, the consumer might have been able to buy a new couch, a new TV, and a new bicycle, and now maybe only two or one of those items because of the inflationary pressure on goods.
And so you're really talking also about the fact that our sector in particular, you're saying this is going to create, sounds somewhat obvious, but I mean, I think we need to point this out, a downward pressure on demand. Do you see that being true and being unavoidable?
The way I would look at it is it's a risk factor. There are opportunities and risks for the home furnishings industry ahead. The pricing environment is certainly an area of risk as the consumer has to make these choices. But that could also be balanced by the Federal Reserve making interest rates more affordable. So we look at the tariff environment as a risk, an uncertainty, but balanced by some other factors.
And you kind of already led me into it here. So you're also seeing positive impacts on the consumer and on demand with the fact that we've seen one reduction from the Fed. They're giving signals that another one might be coming. You're seeing that as being, I mean, we always think about that as mortgage rates and a longer term impact on home furnishings, but you think there'd be something a little more immediate maybe?
So it's interesting, Mark. Right now, the Fed, as it's lowering rates, can have more influence over the short end of the interest rate curve, more near-term interest rates, which tends to have an influence on loans that are originated on with credit card debt or home equity lines of credit. It can have less influence over the long end of the curve, which tends to be more tied to mortgages, where the industry would like to see is some benefit to both. Home equity lines could facilitate demand for more furniture, but what really the industry is looking for is those move events, moving into or out of a home, and that's going to be more heavily correlated to the long end of the interest rate curve.
Gotcha. I'd like to tap into some research that you have done recently. You're finding that our sector's share of the wallet, if you will, you basically said it's normalizing at about 1.5%, if I'm not mistaken, and that I guess is close to what it was pre-pandemic. Obviously, on the one hand, that's a great sign, but is this a different percentage now? I mean, I know we're talking about just if you look at it just from a dollar standpoint, it's one thing, but are we seeing different nuances within that that retailers need to be aware of?
I think the biggest nuance is the consumer is behaving differently today than it did prior to the pandemic. The consumer is spending more time at home, even as there has been a recall back to the office. There's still many who are in this hybrid setup. So that means more usage of tables and chairs and couches. Our hunch is that that is going to permanently increase demand. Or another way to look at it is uh, keep this home furnishing spend as a percentage of the total wallet higher than it was historically.
A couple other interesting, thank you for that, by the way. A couple other interesting things here. You said in many cases, you believe, and bedding is a great example here. You believe that unit consumption may have overcorrected rather severely. Talk a little bit about that and what we can take away from that.
Yeah, so prior to the pandemic, we were in the ballpark of 28 to 30 million bedding units in the United States. We went to as high as 34 million units, and where we stand today is around 25 million units. That would be well below what would be expected given what's happened with the cycle. Now, interestingly, Mark, whether it's for bedding units, furniture, there is a factor that we're increasingly mindful of, and this is a bit of a newer development, which is population growth in the United States. Whether because of what's happened with generational shifts or some of the immigration dynamics that are happening in the United States, the population growth is going to be a core driver of whether it's bedding demand or other furniture demand over the long run. And that population growth might be a little bit slower in the short run than it has in the past. Nonetheless, we do believe, directly answering your question, that bedding demand in particular has overshot to the downside and set for a recovery.
So you're expecting that to be see an increase over the next few years? Is that what we're
Yes.
basically saying? Okay. Because
Yes.
that's well below the average, what you just described is well below what the average has been. That's an important point because we've seen that bedding is really a bellwether for furniture as a whole. You also talked about high price elasticity.
Mm.
Talk a little bit about that and why you're highlighting that.
Furniture is a category that where purchases can be deferred, and we are just at the time as you and I are talking, where a lot of the price increases that are going to be passed along across retail are hitting the shelves, and especially on goods that tend to be more seasonal in nature, things like toys, decor, Halloween costumes. And this is the time when we would expect to see more of that elasticity take shape for the furniture category. So as retailers are passing along price increases, they just need to be cognizant of the potential for unit degradation as all of this unfolds.
Interesting. Okay. You also mentioned, and I think this is something important for us to get into here. One of the areas that you point out particularly as a concern is the labor market. And I want you to talk a little bit about why that is a concern that you highlight and feel like people need to be very cognizant of going forward.
Yeah. Historically, the best indicator of the health of the consumer has been real hourly earnings. So, how much on a real basis, accounting for inflation, is the consumer's spending power increasing or decreasing? And that has been closely tied to consumption growth over a long period of time. At this point, there's still, call it mid-single digit growth in nominal wages. So putting aside inflation, but as inflation starts to eat away at that purchasing power, it could be more of a factor in how the consumer decides to spend and allocate that spend. The other important point here is that we are seeing bifurcated trends amongst different consumer segments. Affluent consumers have been more steady in their spend, and that's important because the top 10% of households tend to account for about 50% of all spending in the United States, whereas the lower income demographics have been much more cautious with their spend, and we might start to see real wages for those at the lower end of the spectrum start to decline, and that would be a further cautionary sign.
You concerned that inflation is going to potentially outpace wage growth? Is that a
That's
key
it.
concern here?
That's it. That's exactly right.
Okay, so how do you manage to that? That's my last question here is so what do you recommend to those listening to this? You know, that's an important thing that you just mentioned as far as these concerns. So how do you manage around that?
I think you have to have uh, all ends of the assortment covered, meaning those that are the elements of the assortment that's going to appeal to more opening price, those interested in opening price products, as well as more full price items and at the higher end of the assortment spectrum. I think you have to be mindful of a promotional strategy. You know, in this environment where there's a lot of inflation that's being passed through, there is an opportunity to be there with value for the consumer, especially around key events where the consumer's spending a disproportionate amount of their discretionary dollars. So those would be two pieces of advice that I would have for those who are listening.
Michael, believe it or not, that's our 10 minutes, but I just feel like there's more that we can get to here and go a little bit deeper. So one of the things that I will do is just mention those of you that are interested in learning more and hearing more from Michael, we're going to do a 10 more and we'll share that link to you. But at the moment, for those of you that this was good enough, Michael Lasser, Senior Research Analyst for UBS, I thank you for being here on 10 out of 10, and we will see you here next time.